Well, good afternoon, everybody, or good evening, good morning, depending where you are in the world. Thank you for joining us for our webcast today. Are you on track with risk and compliance monitoring? We've got 250 attendees today, give or take, so thank you all for taking some time out. We are going to spend around 50 minutes on this topic, so thanks for your interest and attendance. My name's Dan French. I'm founder and CEO at Consider Solutions. I know many of you on this webcast and some of you are new to us. I'm very pleased to be joined by Hans van Ness, our Chief Operating Officer at Consider Solutions also. Both Hans and I have spent the last 15 years in this world, and the previous eras of our careers, as you can tell from our pictures, which have been long, have been in the business processes and systems world. So we're going to take you through today's discussion. So for a bit of context, those of you that know us know that Consider Solutions is on this, on a mission, if you like, to help organizations achieve hopefully not a mythical state of world-class finance, helping the organization drive better business results, reduce the cost of finance operations, optimize cash flow, and have better risk management. And we see the world through pillars. So this sort of Greek temple on the right has these pillars of financial control and compliance, the classics of financial statements compliance, broader risk assurance to do with fraud, bribery, corruption, waste, error, and other exposures. And on the right-hand side, finance process optimization. And of course, process optimization in some respects is the flip side of risk. All of that underpinned by a platform of IT and ERP enablement, because these days everything that we do needs to have a good solid understanding of that. Now clearly in our discussion today about risk and compliance monitoring, we're focused very much on the first two pillars and their relationship with the IT systems and data that underpin it. And in developing our opinions and our points of view and our experiences, we work with a number of global companies, well not just companies, organizations, operate largely around the world. These are just some of them, but they give you an insight into the kind of companies that kind of inform our thinking and our experience as we work with them. So in terms of today's agenda, this is by way of introduction. I want to talk a little bit about some of the changes in the business environment that change or certainly impact our view of risk and compliance monitoring. I want to touch on the shift from a compliance focus to an enterprise risk focus. And how do we work out whether we're on the right track? It's a complex topic, so that's an interesting discussion. And then I'm going to hand over to Hans to talk about what actually is risk and compliance monitoring. I'm going to share some global experiences and case studies and talk a little bit about the process, governance models, best practices, and the detailed approach about how one goes about risk and compliance monitoring. Then we're going to come back for some considerations for a deeper dive and some conclusions and a Q&A. Which brings me to the point about questions. Obviously, we're going to have questions and answers. We need some questions. There is, please do ask questions as we go through this. There is on your panel, there is a question panel, a question place on the user interface. So please type in the questions as you go through, and we'll endeavour to answer them as we get to the end. If we can't answer them for time reasons today, we'll respond by email. So just ask questions as you come through, because it makes the whole thing more interactive. If indeed you have a technical problem, use the same facility and we'll have one of our team try and help you out and sort that out. So ask questions as we go through, that's important. I'm also going to ask you a few questions as we go through a few polls. Some are easy and some might be harder, but it's all anonymous, so we want your participation and we also want you to stay awake. That's good. So, few themes. As I mentioned earlier, we've been working in this area for about 15 years, and there's some themes particularly currently that's affecting risk and compliance and the monitoring thereof. And I'll just touch on these now. The whole question about risk versus control. Certainly 10 years ago and beyond, people were very focused on controls, probably because of the regulatory environment, and everyone's very much focused on making sure we're complying to controls. And sometimes the business risk was actually lost a little. Now, there's a much greater understanding now of the relationship between risk and control, but there is also a paradox, which I'm going to talk a little bit about, and that's becoming clear. And I think being aware of the paradox helps us manage the process a lot better and be clearer in what we're communicating and what it is we're trying to achieve. Managing risk itself has historically been a matter of judgment, about management attestation, opinion, tone, if you like. But we also want to have a balance between fact and judgment. And so part of the goal of risk and compliance monitoring is to actually bring some fact as well as judgment into the discussion. If we can balance the two, then we're in good shape. And thirdly, monitoring tools and technology of all shapes and colors always elicits an interesting reaction, whether they're burden or value, and probably a little bit of each. So we're going to talk a little bit about that as well. So we're going to come on to these topics. I do want to kind of introduce a kind of general discussion now with these 5 key themes. And I'm going to go through them one by one. And I think they're important in terms of how we think about risk and compliance monitoring. So in terms of context, here's a chart. Now, obviously, it's focused on finance function, finance operations, but a lot of this is relevant across our businesses. Now, this is courtesy of KPMG, but we try to be fair and equal and share various surveys by EY, Deloitte, and PwC, and the rest. But this is interesting in that if you look at the general trend, we all know that the cost of financial operations has been reducing, partly due to automation and partly due to elimination of redundant activities, and also to do with centralization and standardization and shared services. So the reduction in cost of financial operations is quite dramatic, certainly as a percentage. But we continue to drive that down. And then if you look also on the right-hand side, financial controls, certainly in the past decade, have had a kind of an unnecessary or sort of an extreme focus, if you like, and mostly due to the regulatory environment stimulated by Sarbanes-Oxley. But these days, we're getting close to a place where we've optimized our financial controls, we've automated the monitoring of them, we're starting to embed these things into standard business processes. And there is a growing and greater focus on financial performance in terms of business value, but also risk in its more essential sense rather than just control. So we're looking at this balance now between risk and value. I think that's a very healthy place for us to be. So that's kind of a good journey we've been on, and I'm sure many of you have been through those various phases. Let's look also at our businesses. I think most of us now are operating in globally integrated businesses. No longer are we operating in just local, regional or national fiefdoms. So these days, we're in situations where we can have suppliers in Australia. We can be creating requests on suppliers from Buenos Aires for goods or services to be delivered in Houston, Texas, for invoicing, payment, and overall settlement to be done in a shared service center in Prague in the Czech Republic. So, that's a global footprint, if you like. But of course, despite the wonders of that enablement, no one person anymore has line of sight over that end-to-end process execution. And it's all been enabled by the wonders of our integrated systems implementations, global process ownership, this kind of desire to make a simpler process for the organization as a whole. But obviously underneath that, there is a lot of detail and a lot of complexity. And if you look at the top left, the Association of Certified Fraud Examiners have been doing this survey longer than I care to remember, but they still say that the typical organization loses the equivalent of 5% of its revenues to fraud, waste, and error each year. So it's not just fraud, although they are the Association of Fraud Examiners. It's fraud, waste, and error, all of those avoidable things. Now, 5% of revenues is 25% of profits to a healthy company, so that's a massive amount of money. So we've still got issues in how our processes operate. And whilst we're simplifying and standardizing, we've still got a way to go. On the bottom left, you'll see where some of the losses go. In the middle, the cartoon in the middle there is about accuracy. Yes, as our business, all our business activities become more material and impactful globally, it's critical that we are accurate in what we're doing, but also not all the information we're posting anymore is coming from humans. We've got a lot of applications generating information. We've got robotic process automation. We've got a lot of places in which data is being generated for us, and we've got to be sure that that is also correct. And again, if you come right round to the bottom right, you would assume that with all the wonderful progress we've made, that our businesses and our business processes would be much easier and cheaper to assure than they ever were before. And of course, that's not happening anytime soon either, not in any substantial way. So it does go to show, this little story of the 6 points here goes to show that despite the major progress we're making, that we are hiding complexity beneath what is apparent simplicity. And then we look at the business changes affecting our priorities. Obviously, shared services is a critical thing for major organizations around the world now, a way of standardizing, centralizing common service delivery, not just in finance, but in other business functions. But whereas a few years ago we were just worried about making sure shared services as a business operated efficiently, now organizations want to make sure the end-to-end processes across the organization, including the shared services component, are efficient and effective, which brings us into that discussion about global process ownership. Organizations are implementing global process owners to try and get accountability and line of sight over those processes, the challenge we talked about earlier. And we've got new technology happening maybe faster than it's ever happened before. We've got robotics and AI on the march. We've got a bunch of other technologies which are affecting, they're going to have a massive impact for many of our organizations. But the specifics about robotics and AI to think about, and maybe Internet of Things, is not all transactions are created equal. In fact, not all transactions in our business are even created by humans. They're often, we've got more and more transactions being created by automated components. And we need to understand that when we think about risk and compliance monitoring, there's an element of our business, which may be small or growing, which is decisions that are being made on our behalf by technology. The drive for analytics is interesting. Ever since I can remember, in the modern era, let's say, certainly for the past 25 years, there's been a push for the organization, for the CFO, for the executive team to drive analytics, what used to be called business intelligence, but now very much analytics. But the truth is, and the evidence is, organizations haven't really grasped this as much as they've been challenged to. So many observers are calling this a Nike moment, just do it, because analytics is going to be a big differentiator. So this kind of affects us also. And then technology-wise, we've got massive shifts going on, not just in the new technologies in the at the outside, but in our core application and data platforms. Organizations are moving from one monolithic ERP system, which covers everything, to maybe a core of a quality data centered ERP with a hub and spoke model to specific applications that feed it, cloud applications, SaaS applications, and so on. So much more of a kind of service-oriented architecture, and that's a massive change as well. So these are all affecting our priorities and affecting our how we need to think about risk and compliance monitoring. And another massive shift is, I kind of touched on this earlier, but moving from a compliance focus to an enterprise risk focus is in full swing. And we used to think about controls and monitoring controls and managing any deviation from controls or exceptions to controls. We used to think about that as a cycle, and we used to assume or hope that our controls were indeed mitigating some valid risk. But the idea of an enterprise risk focus is really integrating these this thought process. So we have business risks across the organization, and they can have positive and negative influences, but the ones we're concerned about, we might implement policies to mitigate those risks, and those policies might be implemented by controls, and some of those controls might be automated or otherwise, and we need to monitor those and also monitor policy and monitor the residual risk itself and then manage that. So this is much more of an end-to-end business-oriented life cycle. The good news is the business process owners and the business leaders understand risk a lot better than understand control, so it's good to have this. So generally this is doing good things for business, and we like to think of this as a virtuous circle, a fact-to-act circle. So from risk, policy, control, monitoring, remediation. And I think this is a very helpful way of thinking about this impact and this shift on how we manage our business. So I did say there'd be a few polls, so time for you to get involved now. Just I've got 4 very quick polls here. Well, they're going to be as quick as you can respond. First poll is very simple. It's what do you do? What's your role relative to risk and compliance monitoring? So number 1, I'm the overall business owner for risk management compliance. So in case you haven't guessed, this is multiple choice. Number 2, I'm one of the business risk management owners. Number 3, I'm responsible for IT ERP risk. 4, I represent audit or independent assurance. 5, I'm an interested observer. This should be pretty straightforward. Please enter your 1, 2, 3, 4, or 5 now. I'll give you 10 seconds because that should be very, very simple. What percentage of you have got through so far? Come on, you can do better. You only have one of 5 choices, and it's the job you do. This is the easiest one. Excellent. 10 seconds. 5, 4, 3, 2, 1. Let's have a look at the scoreboard. So we go. So the biggest individual segment of you are audit independent assurance, which is probably a good thing. So you have an interesting perspective on both compliance and risk management. Secondly, closely followed by the overall business owner for risk and compliance, and one of them. So that's if we actually took the top 2 together, that's probably an even split between business, risk and compliance ownership and independent assurance. So that's helpful. Now you're going to get the results of these polls. They're all anonymous, so you don't need to worry about what you enter into them, but they're going to help inform our discussion today. So thank you for that. Second poll is who owns risk and compliance monitoring in your organization, either in practice if you're doing it today or in principle if you're thinking about doing it. And I don't mean the name, it's a job function. So is it 1, again, do this at will. Is it 1, a dedicated risk or compliance management function? 2, finance or a subdivision of finance? 3, internal audit? 4, some element of IT, whether it's the ERP group or security group? Or 5, some other or unknown group? So again, give you 15 seconds for this, please. 1, 2, 3, 4, 5. Give this a go. So 10 seconds, 5 seconds, 4, 3, 2, 1. Let's see what we've got here. So interesting. Okay, so 60% have a dedicated risk management compliance function. I guess that's good news, and that's probably stronger than I expected. That's excellent. And the good news also is that very few organizations have fallen into the trap of delegating it to IT. If you had this conversation a couple of years ago, you would have had a bigger percentage there. So that's great news. So thank you for that. Third poll is, what level of attention do you get from external audit on the monitoring of risk and compliance? And the options are, 1, we have never had much attention on the topic. 2, we have audit issues now resolved, all quiet now. 3, we have ongoing audit discussion on specific risk and compliance issues, so specific risk areas, specific compliance areas. And 4, we have ongoing audit discussion regarding our overall risk and compliance process, so the visibility, auditability, manageability of the process. So 3 is more about specific issues, 4 about the process, and 5, this is just a hot topic all over the place. So if you give that a go, do the best, make the best stab at that you can. 15 seconds, 10 seconds. See, these questions are getting harder for you, aren't they? 5 seconds, 4, 3, 2, 1. Let's have a look what we've got here. So, interesting. So, ongoing discussion, the biggest single area is ongoing discussions on the process. And that's interesting, and that's consistent with what we've seen in a number of organizations currently, followed by specific risk issues. Yeah, that's kind of interesting. So looking at that, you can kind of get a sense of where you sit, and 20% of you are obviously in deep pain at the moment. So, but that, you know, it's anonymous, so it doesn't matter. And also, you know, it happens to all of us. Everyone goes through that process at some point. Final poll at this stage is, what is your organization's current status with regard to risk and compliance monitoring? Number 1, we have a mature risk and compliance monitoring process supported by technology that works across business and IT. Number 2, we have a risk and compliance monitoring process and technology, but the process is not operating as smoothly as we'd like. Number 3, our risk and compliance monitoring processes fall into distribute or disrepair. And remember, this is an anonymous survey, so you can, if that's relevant, you can do it. Number 4, we have risk and compliance monitoring project underway. And number 5, we're considering plans to address risk and compliance monitoring. So if you would respond to that, 1, 2, 3, 4, or 5, 15 seconds, 10 seconds, 5 seconds, 4, 3, 2, 1. Let's see what we've got there. We're going to feed all this back to you afterwards, by the way, so this is not just some random interest. So 33% of you have a mature process, both business and IT-wise. That's excellent, and that is a good, very, very good result. We've got, you know, a close second. People are concerned about the process isn't as smooth as they like. Now, hopefully you're going to learn some things here that might help that. A few of you had the distribute, disrepair, and the balance are, you know, in the early stages. Excellent. Well, thank you for that. Okay, so when you look at all of this, and those of you at different stages of the experience will identify with this, a lot of organizations, when they've been through the process a while, they say, you know, getting the tools, it seems like a big challenge to start with, but once we get the tools and we implement them. There's a few challenges along the way, but actually it's not that hard. But why is making the process work such an uphill task? And that's a really interesting insight, or it's not an insight, it's a question. The insight is the answer, and we're going to talk a little bit about that. And it kind of relates to this whole question about whether I'm on the right track or not. Talking to organizations around the world and working with them and discussing these issues, what we have found is the one common theme is that success is no accident. We'd like to believe sometimes it is, but organizations that are being successful universally, if they're being sustainably successful, universally they have a governance framework. Sometimes they don't realize they've got one, but they all have a governance framework which deals with these 9 key themes. We're going to talk about these 9 themes in a little bit more detail in a few minutes, but it's critically important. You'll see only one of those is to do with automation and enabling technology, and the other 8 to do with other things. So it might explain a little bit the answer to the question we just posed. But success is no accident, and we're going to talk more about this. So let's have a look at some general perspectives from recent surveys. This is the Boosting the Value of Compliance in a Changing Regulatory Climate survey from KPMG this year. This has got a couple of interesting findings. You can find the reports on the web, or you can get hold of, contact us and we can point you to it. So 84% of organizations, remember this is from the compliance perspective, Chief Compliance Officer, 84% of organizations provide reports on enterprise state of compliance. Well, you'd expect so. You'd probably expect it to be a bit more than 84%. But only 47% of Chief Compliance Officers say their organization has an enterprise-wide capability that includes compliance monitoring across the business. Now that's a big difference. So that tells us that a large percentage are still dealing with an attestation judgment-based approach, which is good, but it's not as good as a combined approach with fact. 69% of Chief Compliance Officers are struggling to exploit technology, and less than 50% of Chief Compliance Officers are using data and analytics. Now that, given the topic we're having today, is kind of an interesting observation. So that's the compliance view. Let's have a look at the risk assurance view. This is coming at it from an internal audit survey. This is a 2017 State of the Internal Audit Profession study from PwC, recently out. And this is where they segment internal audit functions into the leaders, the average peer group, and the laggards. And of the best in class internal audit functions, 47% are increasing their use of data mining and data analytics, against only 35% of the peer group. So 35% in general of internal audit functions are increasing the use of data analytics. Yeah, that's probably cause for concern. 44% of these best-in-class internal audit functions have increased investment in data analytics versus 28% of peers. Now, of course, when you ask me about increasing investment, often that relates to technology, and just buying technology doesn't really solve the problem, as we've already started to allude to. But there's some interesting stats there, and maybe that gives you cause for concern or gives you some hope, depending on where you come from. So those are 2 different views. So 2 more polls. What is your biggest challenge to sustainable risk or compliance monitoring success? So these are 5 options. One is clarity on business ownership, the 3 lines of defense model. Who's meant to be doing what? Number 2, conflicts between risk and other business priorities. Number 3, business commitment, clarity, or buy-in to the process. 4, technology complexity issues. Or 5, no challenges, it's a breeze. I go on just webcast these days. I don't need to do anything else. But it is anonymous, so you can actually have 5 as well. It's okay. So would you have a go at that, please? 15 seconds. So what's the biggest challenge to sustainable, effective, successful risk and or compliance monitoring success? 5 seconds. 4, 3, 2, 1. Let's have a look. So, right, okay, it's a little bit more blurry. So the risk, conflicts between risk and other business priorities, I'd expect that to be high, probably expected to be higher still, but 34% of you see that the biggest challenge. 32% business commitment, clarity, buy into process, followed by technology complexity. Nobody's having a breeze, or they've probably already gone home, and 16%. Right, that's kind of interesting. So hopefully this is zeroing in on some of the topics we're going to talk about. So that's very, that's very interesting. Okay, one more. Risk and compliance monitoring or data analytics tools in use today. I don't really want to know the name, but broadly, 1, we're using none at all. certainly with respect to risk and compliance monitoring. 2, we're using Excel or desktop tools. 3, we're using self-assessment tools, by which I mean attestation tools to allow management to assert how their risk or compliance performance is going. So judgmental, which is all good stuff. 4, your ERP vendor or major IT vendor provides tools which you use, or you have independent tools. Could you just, that should be fairly straightforward. 15 seconds, just 1, 2, 3, 4, or 5. So 1, we've got absolutely none. 2, we're using Excel or desktop tools. 3, self-assessment tools, risk assessment tools essentially. 4, ERP vendor provided. 5, independent. Okay, 5, 4, 3, 2, 1. And it's interested 36% using desktop tools, followed by your major, followed by independent tools, and followed by, okay, that's an interesting spread. So that'll, that might be interesting to you, and that's kind of just interesting for the stats as that we share with you after this. So I've given you some talk through some of the context, the landmines waiting for us. I'm going to hand over to Hans van Ness now to talk to us a little bit about what risk and compliance monitoring actually is. Hans.
Thank you, Dan. Yes, I want first to take you on a brief journey to give you a bit of more context, because the world of risk and compliance monitoring is also, in my opinion, sometimes a word salad, and untangling that a bit might help to narrow the context. I do that in a few slides. The first slide, probably if you have joined any of our webcasts, you must have seen, and we always start laughing about it because we use it so often, but it is so strong in explaining some of the major concepts that are relevant to risk and compliance monitoring. You see a car park and the entrance to a car park, and the car park is synonymous with a process in your organization, in this case temporarily storing cars. And you see there is a nice access path, and there is a barrier there, and that symbolizes the control that allows the authorized entry, authorized people only with their key cards. And the barrier in the middle has a computer attached to it, so there's a nice monthly barrier log created, and you could see that as the equivalent to your compliance report, your compliance attestation, technical attestation. And then you see the snow tracks, what happens in the winter. People might forget their key card, or they have other reasons to illegal park, and they go around the barrier. So that symbolizes your residual risk. So in one picture, you see the risk versus control versus compliance situation depicted. The second element that we have to take on this journey is this notion of fact versus judgment that Dan already addressed. We all know what should happen, but do we know what actually does happen and what impact that has on your performance in various ways, from the worst fraud to the simplest not optimized process. In fact, you have to say it is design versus real life, yeah, or shoot versus actual. But it also has a deeper layer to it, where you have to say what is the chance that it happens, and if it happens, what would be the average impact that risk happening on our performance, on our results. So those elements you have to take into account to fact and judgment. Risk and continuous monitoring, and I have between brackets here analytics, and let's take a little sidestep. Some people call it risk and continuous monitoring, some call it risk and continuous analytics. I think it's a word of choice. I find monitoring sounding a bit more proactive, so that is my more preferred phrase. If you look at the central word here, it is continuous, meaning that there is an ongoing process to the left from understanding to improving, in the middle from testing data once, but maybe using it for many policies that you have in place, and to the right it is this, the symbolization of the process. So it's not only get clean once, but it is stay clean always. So not a project, with a beginning and end, but a process that is continuous. So continuous is a key phrase here. If it's not defined and laid out and designed in a continuous way, you will lose attraction and you will lose quality. Another element in the risk and compliance monitoring world is the notion of the 4 layers. Most of you maybe know them. They are originally designed by Gartner some years ago, but they still fulfill a nice purpose. Let's assume your orange centerpiece is symbolizing your process. Then on the top you see all internal and external stakeholders that are looking on or involved with that process, and at the bottom you see the myriad of systems and data sources supporting that process. By the way, the data sources can be both internal and external, of course. And this process you can, from a risk and compliance monitoring, divide into 4 layers of monitoring. From the bottom, the 2 sections on the bottom, they address the can-do, so the more the preventive way of looking upon your process. So how are they systems that support your process configured, and how is the access arranged and orchestrated and monitored. And then on the top you have 2 layers that look at the actual usage of the execution of the process using the underlying system. So how was the master data used? Was it accurate and controlled? And how are the actual transactions executed? And do they deliver any anomalies or any difference from the design situation? A very neat and handy way, these 4 layers to look upon your process monitoring. But there's one thing we shouldn't forget: there is more than just purely automated risk and compliance monitoring. There is still room for entity level manual or semi-automated oversight, and in some cases human judgment in the form of certification and self-assessment is needed. So, and they will spread out both over the can-do and the did-do layers. In summary, if you look upon risk and continuous monitoring, it is essential that you connect to the relevant data. Relevant in the sense it is meaningful, it is concise, and it is complete. You monitor for exceptions compared to the situation that you have designed, and you have to make sure that whatever exception that you find, an action is taken to resolve or remediate it. Otherwise, every monitoring is a waste of time. Okay, so far my little journey to scene. Let's see if we can give you some examples, just some very different examples on risk and compliance monitoring, different from either the business value perspective or the business domain that had triggered the monitoring. And we use that by symbolizing in the center here a little triangle. In fact, that this is the Greek temple that Dan has presented in the beginning, translated in lenses. Every risk and compliance monitoring adventure starts with the desire to take a lens, and that can be the compliance lens, that can be the risk assurance lens, or it can even be the finance process optimization lens. But in practice, you will see that every implementation has elements that can support 2 or more of these lenses, some by design, some by coincidence, sometimes by coincidence. Let's take the first example, and that's an example of a continuous compliance monitoring solution. Big car manufacturer, very big. And what they looked for as a value is as automated as possible internal controls monitoring, making sure that the internal and the external auditors are completely satisfied and take the outcome of that process as the truth and the input for their business reporting. So the value is there, the high level of automation in a very complex organization. The second example is an example of a continuous risk monitoring solution. Leading fast-moving consumer goods company had the notion to start from a risk monitoring perspective to look upon their travel and expense process in the organization. It's a very large organization, many countries, so many people doing travel and using expenses to execute their work. And the value for this organization is that in fact they set the operating standard for the company, telling their employees what is acceptable and what is not. The third example is again a internal controls requirements example, whereby a world leader in hearing care solutions was looking for a very efficient way to support the whole compliance monitoring around the request from a user for access to a application until the automated provisioning for the underlying ERP systems. They were looking for a closed loop process whereby internal controls could accept that everything was controlled in a stringent way, but was executed in such a way that it gave the highest level of customer support. And last but not least, another continuous risk monitoring example, a world-leading toy manufacturer who decided to focus completely on error, fraud and waste monitoring. They had the idea that money was flowing away, bottom line was impacted heavily, and they have institutionalized this continuous risk monitoring, and they filter out many exceptions per year with quite high values. Most of them they can recuperate, but at least they can plug some holes for the future. So you see very different examples from a business value perspective. Also the trigger or the business domains that start with risk and compliance monitoring can be very different. We have 3 examples here. To the left, a situation where the driver was to get business and technology on one page and to have an integrated process designed and executed. The middle one was in fact triggered to manage with a relatively small central group of people a very, very complex and large landscape. And to the right, it is an example of where the need or the curiosity to know how the current situation in the organization is led to a risk analysis to set a benchmark. We could call it a health check, and to take that as the start for further optimizing actions. Very different examples. And what do you find if you look at those organizations? What do they discover with their risk and compliance monitoring? A myriad of different things, of course, but there are some common elements in there that you see in most organizations, and I try to capture those in this and in the next slide by grouping them into 6 sections. Well, the first one is what I call purchasing anomalies. Quite often you see that purchase orders are changed after creation, the famous approval bypassing, which probably you have seen left and right in your own organizations, or at least attempts. What you also see is very weird payment terms, not the standard ones, very short ones, very long ones with different reasons. The second group, unusual and suspicious payments, especially when you do international business. Sometimes the fees and bonuses and commissions to third parties between beginning and the end of the process are at least some things that you have to watch, and often are a real exception that should be addressed. Payments to alternate addresses out of error because of a typo during the vendor setup, or as a potential fraud, the bank account address of an employee is used. All those things we see and have to be monitored, and hopefully you monitor them and you find nothing. That would be really the good news. The third category are the invoice anomalies, and yes, there are still a lot of duplicate invoices around, despite unique numbers and heavy controls in your ERP systems. But there's so many reasons why things can go wrong, and can lead to double payment for the same service or good. And don't forget the manually entered invoices for special reasons that could lead to input errors or again duplicates. The second set of examples, travel and expense. I already indicated that with one of the business cases. What you see there is that somebody, for instance, claims the hotel cost for a business trip, both with the credit card, the company credit card, and the expense form, things like that. Or there are drip feed expenses, very small ones, whereby the approval threshold is not reached. That can also indicate things that are not as expected. The other side of the business, you have the sales side. Again, there you see, like with the purchase orders at the purchasing side, that sales order creation, you see changes after the initial creation to bypass controls, approvals, and workflows. And what we see a lot is circumventing system controls, and as a result of that, distorting financial numbers by using dummy amounts to make sure that certain sales order parts are not shown on lists, and the manager is not aware what the staff is doing. And last but not least, don't forget the heart of the financial operations, what we call the general ledger anomalies. We have to monitor for elements there too, because it's relatively few people probably that have access, but they have powerful access. And for instance, if your fixed asset is not up to par, not up to the asset class standard that you expect, that can have a big impact. Manual bookings on normally automated accounts is a very obvious one. And don't forget bookings at weird periods during weekend or public holidays, although I must say with our 24/7 economy, there can be a good reason for it. But most of the time, because we're talking big amounts and big impacts, it is worthwhile monitoring those. So just 2 slides of examples that we see in practice. If you go now a bit deeper to look into organizations that do this and are doing this successfully, how they approach their process and best practice, we can say that that doesn't make a big difference if you're just planning to have your risk and compliance monitoring in place next year, or you have just started, or you're on your road for 5 years and you want to check where you are. Most of the elements are applicable to all those 3 stages. First, you will hit challenges, and we've listed the key challenges here, the 6 key challenges, and you will hit them, like it or not. And some of them might be tougher in your organizations than others, depending on your maturity level, but you all will have to manage your stakeholders. Be aware what they are, making sure that they get what they need and not that they get what comes out of the system, that the awareness that stakeholders are changing over time and that the demands are changing. I already addressed the process versus project thing. Don't spend tons of time to get clean and then get dirty again and start all over again next year when the audit is coming nearer. And priorities are changing all the time, because everybody in the stakeholder community can agree that the monitoring that you want to design is the most important thing in life, but I bet your life tomorrow they have other priorities. So if you don't keep showing them value over time, you will lose attention. Next to the key challenges, you will have to all the time go through a requirements to review and refine a set of steps. It is sometimes cumbersome, but you have to take all those steps. You have to know what you talk about. You have to know what exceptions are. You have to automate stuff, etc., etc. And sometimes it is the tools that you use suggest that they deliver a complete solution for this all. They don't. They deliver good starting points in various steps. They can give you a set of ideas, a set of rules to monitor, but they will not work without a complete end-to-end process. They're a good starting point, but they don't do the real thinking work for you. If you then have monitoring cycles in your organization, and I would say cycles multiple, probably you have more than one, per cycle you have to really define a good end-to-end process. And that starts with making sure that you get the right information that you from the systems, the feeder systems. Then it steps further to the fact that you have to really come up with smart ideas on the conditions and to find out what your exceptions are, right to the point. Yeah, make sure that you don't come up with tons of information that is not relevant to the organization. So make sure that it is compressed to the essentials and no waste in the data. Make sure that what you have is targeted to the audience. So if the audience wants summaries, they get summaries. If the audience wants details, they need to get details. And they should be presented the information in an actionable form, so that they, as risk and process owners, know what they can do with the information you present on the exceptions, and they also understand what happens business-wise if they don't do anything about it. An important element is what we call the data factor. Like it or not, when setting up risk and compliance monitoring solutions, data is an important element, because everybody in your stakeholder ecosystem and in the applications that are supporting you and in the tools that are supporting you, data definitions might be different. And you have to make sure that the definitions are transparent for everybody involved, the definitions that you use, that they are understood by everybody, and there is no discussion about any outcome of an exception because somebody thinks it is different data. Maybe you are lucky and you can use some elements and results from a data governance project in your organization. If not, you have to attend to some data elements and sort them out before you design your solution. And then the process, how to get to that process. Well, then show this governance framework. This is our framework. We use that, and you're happy to use it. If you have an equivalent framework that does the same, has the same intention, has the same focal points, fine for us. I will try to explain a bit more in detail how our framework works. We start at the top with the mission and objectives, and of course there we discuss very clearly what the desired outcome of the risk and compliance monitoring should be. There should be consensus on senior management level, and there should be a context, maybe with the governance board, and etc., and other business drivers. Stakeholders mentioned before, very important. Define your community, and the community is bigger than you think. Define exactly what responsibility, authority, and the members have, and who does the work, and hopefully has the capability to do so. And keep in mind that your stakeholder community will be changing quite a lot over time, so you have to make sure that you get all the new ones on board too and bring them up to par. Very important, we can't stress enough, just define what good looks like. Make sure that everybody has that same notion, or it could be multiple things that look good for the various parts of the community. Make sure that it is communicated. It is also communicated in the right dimensions. So again, detailed where detail is necessary, and summarized where summarized is a summary is enough. And make sure that you communicate that throughout the stakeholder group, not only in the beginning, but on a regular basis, especially when things are changing. This is a program. This is not a project. This is a program, a continuous program. So it needs leadership, it needs governance, it needs a structure. Otherwise, if that's not there, it will end up as being a project and we lose all the good stuff on the road. You have to design your process end to end. So not only the bit where the ERP is asked for data and the tool is reporting something, but end to end. Who asks for it? Who looks over it? Who does the oversight? Who does the added value, etc. And the reporting is very important in that. Not too many reports, maybe not a standard report, maybe a summarized report, but a report that serves the purpose of the process. The work has to be done, so you have to think about sourcing. Sourcing is more than just having people in the operation. It is also thinking how you want your sourcing strategy to be applied. So internal people, external people, combination, for what reason, what is the overlap, and of course if you have defined that, you need to measure quality over time. And yes, there it is, 1 out of 9, something about technology. And technology is as much the landscape and the environment that you are working in, as well as the integrations with other areas like identity management areas that you have to work with or have to align with. And yes, in the middle, we talk then about the pure risk and compliance monitoring tools. They are important. You can't do it without technology, but it is only 1 out of 9. And you can have the resources, but without the right skills on the various levels, and there are various levels in there, you're nowhere. So skills requirements, skills management, and skills optimization, again over time, crews are changing, is very important. And last but not least, business service management. Measure your customer satisfaction, measure your the change in demand from stakeholders and customers, and also make sure that you keep on measuring the value versus cost ratio of your risk and compliance monitoring process. Best practices in this? Not surprisingly, most of the best practices are around the process element and far less about what it used to be on the tool element. We have listed the 8 most important ones here. I'll take a few out. My favorite, and probably that will remain, is the less is more one. It is far better just to monitor for 3 risks and make sure that there is an organization behind it that picks up the exceptions and does something about it. And after a year, we can conclude that we can look at 3 other more risks than to monitor for 200 risks, producing a lot of paper and nothing is happening. That would be a terrible waste. Another one is transparency. It should be very clear how the process works, why the process works the way it does, what can be expected and what cannot be expected from the process. Because if the stakeholders involved with that understand that, they're much more likely to pick up the results and accept the results, and that goes hand in hand with the confidence that what they get presented are the right results, the correct results, and complete results. Best practice is something that can be for every organization have a different order in which elements are more important or less important, but we are convinced that all these 8 elements play a role, and the last one is very important. The only certainty in life is change, and the business that you're working in, as Dan described, is constantly changing. So however you organize your process, it should be agile. In summary, so what is risk and compliance monitoring in a good fashion, in a good way look like? What should it do to be called successful? It should do 100% monitoring. not look at samples. It should be largely fact-based, not opinions and hearsay. It should be very, very sharp in the way it looks upon exceptions. Minimal noise. Focus on the essentials. Focus on the risks with the highest impact, or the compliance need with the highest need. Technology, important. You can't do without it, but you should use it effectively. So technology can do the basics, and that frees you and the other quality resources up to look at the more important things in the monitoring arena, and allowing you to generate business value with your risk and compliance monitoring, and setting you as a business partner, and not as the overhead that just produces reports for report's sake. Thank you, Dan.
Thanks, Hans, for a very thought-provoking talk through that, your experiences and observations there, particularly around the process and governance model. So we can talk a little bit about considerations for a deeper dive. Please continue to ask questions through the interface. As I say, we're running a little late, so we might not have time to answer them verbally, but you will definitely get a response by email. So, your deeper dive depends on what diving board you're on. If you're starting out, if you're one of those people in the early stage of starting out on risk and compliance monitoring, the second 2 points are probably most relevant. Considering maybe some focused, rapid, quick scan for risk and compliance monitoring and define scope to produce results, demonstrate value, and use that as an input to a business case discussion and planning. And we can help you with that, or you can find other ways to do that. But those are the 2 things I would consider if you're early in this. But wherever you are in the process, and particularly if you've been going down this road for some time, I would seriously recommend you take that 9-segment governance model and do an assessment. You can do it yourself. You have the information. Get the stakeholders together, do an assessment against each of those 9 levels, and establish where you currently are, what the consensus is on current status, where the priorities are, where you want to be, and be able to set yourself a roadmap. So I think that's a critical thing. You can do that yourself. You have the information. If you want help, we're able to help you. So in terms of some conclusions, that benchmark and call to action I was describing there, that is the Pentagon. The information is here in the slides. You can ask for the slides. You can use that 9-segment model. It's been proven to be an effective way of having a consensus, prioritization, roadmap, and governance. On the right-hand side, make sure that you are really integrating your compliance and control thinking with enterprise risk management. So really from fact to act. And if you were to come to some conclusions, Hans mentioned it, I mentioned it, there's a lot of change, probably more change than ever going on, although we always say that. It seems to be a perpetual situation. It's always more change than there was before. Consider compliance in the context of enterprise risk. That governance model is critical, and use that to get consensus on your maturity level and priorities. You do require technology, but treat that with the respect it deserves. It's one of 9 points, as Hans made. Ensure you quantify all the value you deliver, and above all, take action. So one final thought is there's a lot of technology around, particularly in the world we're in now. There's an awful lot of new technologies being touted, and I like this cartoon because it reminds us, however wonderful the technologies are, we do have to apply our real intelligence to real processes and real governance. Whatever the technologies are, they're 1 in 9. I'd encourage you to think about the other 8 elements with equal diligence. So I like the idea of being concerned about the decrease in real intelligence, which I see on a regular basis. But that's a separate issue. That's just being a parent. So that's what we've discussed. Thank you very much for your contribution. Thanks for your questions. If you have any more questions, send an email to Emma. We are running late, but to do you the service, we are going to respond to a couple of the questions you have asked online. So we'll try to be quick. I like this one. The first one comes to hand is, what is the right balance between fact-based data analytics and judgment-based attestation? Hans, would you give that a quick thought?
Yeah, it's a good one. Yeah, well, human nature like facts, and I think management like attestation. But to get rid of the joke, I think you need both. I think you need to find a balance. What you can automate, you should automate, and what can't be automated and needs human judgment, make sure that the basic data upon which you take your decision is created in a factual, automated fashion, I think then you have best of both worlds.
Okay, so it's a bit of both.
Yep.
One more question, and I'm quite engaged by this one. We find it much easier to get the business bought into specific risk analytics on factual events, but harder to get engagement on the controls monitoring piece for compliance. Is that common? Hans, you want to say a few words from experience?
Again, a good one. We've seen that quite a lot, and in essence, it is the government's framework full circle again. If you have stakeholder expectations, process design, and level of sourcing automation not correct for one of your monitoring cycles, then there is a risk that the acceptance of that, in this case the compliance monitoring, is more seen as a burden because the value is not seen, the level of work involved for the process owners is too big, or they have to dig around to find the right details. Of course, that then mirrored to a more risk monitoring exercise whereby you see events and exceptions close to the operational processes that you work with day to day as a process owner are more attractive. So go through the circle and make sure that the controls monitoring piece for compliance is getting as, I wouldn't say sexy, but as interesting and valuable for the process owner as the risk analytics.
Thanks very much, Hans. We have taken an hour of your time and we promised to take 50 minutes, so I apologize for the extra 10 minutes taken. I hope that you found it useful. Thank you very much for your attention and for your participation in polls. We will share the poll results with everybody. They're all anonymous. If you want any specific other questions, please email Emma. If you want a copy of the materials, email Emma. And thank you very much for your time and have a good rest of the day. Thank you.